Hey everyone, welcome back to Upside Down Data. Making this video to bring you an update about risk across the crypto market. We're at this period of time right now where, even if the price of Bitcoin and alts basically grind sideways, we're going to tend to see risk come down across the market. And so we want to do these regular check-ins and so that we're, keeping up to date with where things stand. What you're looking at right now is our most recent check-in from a few days ago, and so we're going to do an update now and see how things have changed. So if you guys like the content, subscribe and like the video. Follow us on Twitter. You can see us right here. We put out these regular updates about risk and more. So let's pull up the current UDPI risk gauges. If you're familiar with the channel, you're pretty familiar with these, but if you're not, you're just looking at 23 assets, that's Bitcoin, Ethereum, and 21 alts. And their risk measures right now, ranging from -5, which is the lowest risk, highest upside potential, and least downside potential, and all the way on the other side in the red is +5, which is the highest risk, the most downside potential, and the least upside potential for those assets. So something that we talk about a lot here on the channel is how you can get more information by looking at all of these alongside each other and trying to aggregate across them and look for trends than you can just isolating any given one and trying to figure out what it's telling you. I like to think of this as a trend analysis. This is a unique way to look for aggregate trends that are playing out across the market. And what you can see here is that most of these needles are pointed left. That's pretty clear at a glance. And one of the reasons why we like to use these risk gauges is to make that kind of information really easy to absorb visually. But if you do a little bit of math, you can get some more information. So I think maybe the headline here is that if you just average across all of these risk gauges, you get an average of -2.06. So you could think of that as, the aggregate risk across these 23 assets. Now, these assets are not necessarily representative of the entire universe of cryptocurrencies. But 23 is a reasonable number, and a lot of these are the major ones. Most of the leading ones are up here. So I think that this could really be thought of as kind of an aggregate risk measure right now, -2.06 out of a scale of -5 to +5. So if we wanted to boil it all down to one number, that's something that we could use. What that would suggest is that there's more downside potential that's realistic for the market as a whole. Potentially. It doesn't have to happen. It's downside potential. That's why we use that terminology. But the market could theoretically get down to -5, and so sitting at -2 is not as deep red as it could be. On the other hand, there are other ways to look at it, which do suggest that the market is pretty oversold, at least by certain metrics. If we start at the bottom, we've got multiple assets, now 3 out of 23 that are below 4. What that means is that there are at least a few assets out there that are just about as oversold as they have ever been in their histories. That includes HBAR, DOT, and VeChain. All of those are also fundamentally strong assets, and so if you have an interest in them, now is a good time to accumulate. We know that historically these regions tend to be good times to accumulate. Not financial advice, but those assets look pretty tasty to me. If we move up the risk gauge, we can see 9 out of the 23 that are below 3. That's an increase from a few days ago when we last did an update here. That means that some of those that were in the -1 to -2 range have continued to tick down in risk, and we're approaching half of the board being at quite an oversold reading at -3 or below. But not a majority. Still a majority are above that reading, which is kind of a middle of the road type of reading, right? It means that things are pretty oversold, but they could get more oversold if more assets were to continue to see their risk grind down like that. So those both are increases. There are more below -4 and there are more below -3 than there were just a few days ago. On the other hand, there's little or no change, depending whether we count Litecoin, which is the new one that we just added yesterday. When we look at how many are below -2. It's about half, 11 out of 23 are below -2. And so -2 is really the line in the sand right now. That's where the market is divided. That also kind of lines up with the average. If we just average across these, as I mentioned, we get a minus 2.06. And we could also think of this as, kind of a median. So we have a mean and a median of sorts that both agree on -2 as a very important level to watch. And so I'm kind of flag that as something that we're going to want to continue to watch, is where are many or most of these assets relative to -2. Most are below -1, 16 out of the 23, that's also an increase. And there are only a few that are above 0. I'll let you count those up for yourself rather than doing it all for you. The one that I'll point out though, and this is kind of an outlier analysis instead of kind of a trend analysis, an outlier analysis, if we look at what's really standing out here, well, it's obviously Avalanche, the highest risk asset and also the best performer of late. And so the question for you is, if you are watching Avalanche, is do you think that this high risk means that it's just outperforming? It's outperforming not only the rest of the market, but also its own historical price action? Because that's what it implies. And the question is, do you think that that's likely to continue? Or does it mean that it's overheated? Oftentimes when an asset gets away from the rest of the market like this, it's an outlier in one direction or another, you might expect it to revert toward that mean. So that's one possibility for Avalanche here, that it's got to come back down to earth. But if you're really bullish on Avalanche and you think that it can not only continue to outperform the market, but also continue to outperform its own historical price action, which is what the fact that its own risk level is a little bit elevated tells you, then you can continue to be bullish on AVAX. With so many lower risk options, my personal opinion would be, check out the H bars and the dots and the V chains of the world. But again, not financial advice. Do your own research, make your own decisions. I hope that this is a helpful ingredient for you in doing that. So that's all for now. Remember, with the UDPI, WAGMI.